Hi everybody, I'm Brittany Lewis with Forbes Breaking News. Joining me now is Shavel, CEO of Verisk. Lee, thanks for coming on in.
Brittany, thank you for having me. It's a real delight to be here.
Before we dive into the conversation, can you just give us an overview of what is Verisk?
Sure. So Verisk is a data and analytics company that comes from an interesting background. It used to be a utility that was owned by the property and casualty insurance industry. And we collected statutory reports, regulatory financials, and reported those to the state regulators. The insurance industry is a state-regulated industry. And in the 1970s, when we began that activity, we also began collecting data on behalf of the industry. We were the first in the industry to get mainframe computers to collect and analyze that data, share it with the industry, and fulfilled that utility function where we were able to invest on behalf of the industry in helping them make better underwriting decisions, improving their claims process, and understanding the risks that they face. And in a lot of ways, that's still what we do today. Although data sets have expanded dramatically, technology has improved and changed in a lot of ways. And so we are investing in new data sets, in new technologies to help the industry better perform the functions that they do to provide resilience globally. And we are now independent and separate from the insurance industry.
I do want to talk about some risks that businesses are facing. Right now, extreme weather events, we have seen many over the course of the past year, starting with wildfires in Hawaii, the hottest July on record, an active hurricane season, and even just a few weeks ago, a flash flooding incident that devastated both the northern New Jersey area as well as the New York City region. So how does this impact insurance?
So the most immediate effect is that it has clearly increased losses for the industry. And it has done so at a level of increase from a loss perspective where it has challenged the profitability of the overall industry. In 2022, last year, the industry reported underwriting losses of $26.9 billion. And so far this year, the losses just for the first half of 2023 is approximately $24.5 billion. Now, if the industry isn't able to profitably underwrite business, then they are going to be less able to absorb those risks and write additional business on an ongoing basis. So those increased weather events are generating higher losses, but it's important to note that it's not just the increased number of events, but we have greater exposures. We have large numbers of individuals that are moving to states like Florida and building homes or other buildings in a high-risk area that's going to be subject to greater hurricane risk. And so the overall exposure is growing. And of course, you also understand that inflation has been an impact on materials costs and labor costs, which are contributing to those larger losses. But as you state, the higher number of weather events are driving larger losses for the industry, and they have faced constraints in how they can increase their rates from a regulatory approval standpoint, which is compounding the problem.